Capital One Financial Corporation was founded in 1988 by Richard Fairbank and Nigel Morris in Richmond, Virginia. The company's headquarters are now located in McLean, Virginia. Fairbank and Morris entered into business with the goal of serving the retail banking market at a high level based on the belief that the power of information technology testing and great people could be combined to bring highly customized financial products directly to consumers. With tweaking the original business plan, mergers, and acquisitions, Capital One experienced a highly unusual and unexpected growth spurt, despite being a company whose sole business is consumer lending. Such companies are typically extremely vulnerable to consumer borrowing behavior, which tends to be decreasing or ceasing during hard times. Despite these downsides, Capital One has continued to grow since the beginning and now has operations in the USA, Canada, and the UK. Today, the original founder, Richard Fairbank, is current chairman, president, and CEO. Under his leadership, Capital One has been classified as a Fortune 500 and operates on the New York Stock Exchange under the acronym of COS. With the unusual growth, Capital One's product focus is on expanding the retail banking, credit cards, loans, and savings. Today, Capital One is a highly respected company continuously operating successfully in the black. With customer analysis, Capital One operates in the credit service industry. Capital One focuses on three main segments: small business owners, automobile buyers, and homeowners. Capital One offers credit cards and money market accounts to small business owners. To all automobile buyers, Capital One can provide new and used car loans and auto loans refinancing. The homeowner segment takes advantage of Capital One's mortgage offerings, new home loans, and mortgage refinancing services. Finally, individual customers can take advantage of Capital One's credit cards, student cards, reward cards, and personal loans. Capital One focuses on these customer segments by fully understanding everything, aiming for these customers to have high usage of services. Many of the customers that use Capital One are repeat users. These customers also seek out lucrative loyalty rewards, safety in their investments, simplicity in the company's operations and interactions with the customer, and convenience in dealing with the company. Many of these needs are met by Capital One, and this differentiates Capital One from other similar companies. Capital One's customer base is highly price sensitive. Many of the services offered are interest rate related. The main customer motivations for using Capital One are as follows: having the right people representing, rewarding and appreciating its customers, being a Fortune 500 company with a good reputation in the industry, boosting sponsorships targeting certain specific customers in the need of financial help, and supporting charities that customers can relate to. Despite all these motivations for using Capital One services, there are various customer needs that are sometimes unmet. These include occasional customer dissatisfaction and the reliability of some employees in the online banking system, a lack of flexibility of forgiveness and late fees, and a lack of versatility when it comes to customers transferring money between various accounts. We'll now move on to barriers to Capital One. Barriers to entry for the credit card industry are very low. Entry is free and without limit, absolute, and are also reversible. With such little barriers, there are many competitors for customers to choose from. One obstacle that new entrants of the industry find is that people do not like to go through the hassle of switching credit cards. Capital One has had a success through giving people the right price at the right time, and also through their efforts to customize cards that fit the lifestyles of their customers. An example of this would be the Capital One Venture Card, which has many great perks for people and travel a lot. The main substitute for credit cards are commonly debit cards, which are run directly through banks. Capital One has been a very profitable company over its history. However, the company recently reported a profit of $407 million last year, which is a decrease from $697 million in the previous year. Growth from loan balances and seasonal effects were the main cause for the decrease in the profits. Despite this loss, Capital One is expected to buy HSBC Holdings, which is a $30 billion in loans, for a price of $2.6 million. This deal is expected to go through in the near future, which will make Capital One the largest issuer of private label credit cards in the world. Customers have many options in the industry and therefore have a lot of power as well. Customers are always looking for what best suits their needs. And in order to not lose any market share, Capital One must continue to adapt and be innovative within the industry. To better understand the industry trends, we can take a look at J.D. Power and Associates Credit Card Satisfaction Survey for 2011. The Credit Card Satisfaction Survey gives credit cards a score based on a 1,000-point scale. The scores are based on 6 key factors: interaction, credit terms, billing, and payment process rewards, benefits and services, and problem resolution. One trend we can see from looking at a previous J.D. Power and Associates Credit Card Satisfaction surveys is the industry's average customer satisfaction rating has increased in the last 2 years. In 2009, the average was a score of 705. In 2010, the score was 714, and in 2011, the average score increased to 731. Some of the substantial increases in the industry's key factors were in problem resolution and credit terms. Customers reported fewer problems in 2011, and problems are down from 40% in 2010 to 11% in 2011. The survey also showed a decline in time to fix existing problems from 5.8 days in 2010 to 4.9 days in 2011. Another substantial increase was the customer satisfaction of transactors as well as revolvers. Transactors are the customers who regularly pay their monthly balance, while revolvers typically have a balance at the end of the month. To understand Capital One's product quality, we can look at the customer satisfaction score they received in 2011. Capital One's customer satisfaction increased from 711 in 2010 to 720 in 2011. Although Capital One is happy to see the improvement in this category, they are still being outscored by many of their competitors. American Express was given the highest customer satisfaction score with 786, and Discover Card received the second highest score of 779, and the Barclay Card was given a score of 730. Capital One is hoping to merge in with the Netherlands-based ING Group. Capital One would purchase ING for nearly $9 billion. They are currently waiting for the Federal Reserve to make a ruling on the proposed merger with ING. If the merger takes place, Capital One will receive nearly 7 million customers. However, the biggest interest in obtaining ING is their intuitive online banking system. The first scenario that could happen in the near future that Capital One should pay close attention to is if their recent acquisitions do not create added profits. In this case, some possible strategies are to try to create stronger relationships with customers of acquired companies who are unfamiliar with Capital One, create incentives for customers to stay with Capital One after the acquisition, and or reevaluate the way the business is managed. Since most of the acquisitions have been in the similar lines of business, they may work well, but with the deep recession, they may face problems, so we estimate that the probability of the scenario is 60%. The second scenario that Capital One should pay close attention to is the possibility of government proposing increased regulations on credit cards. In this event, possible strategies would be to invest in education to teach people to understand how credit cards work and how to use credit cards responsibly. Try to develop stronger ties with politicians to understand your position, make regulations hurt as little as possible, and or develop a new product that isn't affected by new regulations with credit. With credit being a significant cause of the recession, there will likely be regulation on the industry. The party who wins control in 2012 will probably be the biggest impact on immediacy. We estimate the probability of the scenario to be 70%. Capital One has many competitors, and most of which offer extremely similar products and services, making things like branding, customer service, innovation, and overall marketing very important going forward if they wish to continue to gain market share. For its size, Capital One has been very effective at gaining market share over the past 10 years. It's currently in fifth with purchase volume of $98.34 billion per year. The companies immediately ahead of Capital One are significantly larger in size and have generally been in the business longer as well. Capital One's main competition comes from direct competitors such as American Express, Chase, Visa, and many others who provide credit cards and other credit services. They typically offer similar products and services that could easily lead them to becoming a substitute if Capital One isn't careful. They also face the threat of companies such as retailers like Target moving away from their core competencies to develop their own credit cards for their customers to use with their retail products. Other threats come from companies looking to develop products that are not credit cards, but could be used as alternatives to credit cards. As an example, this recent introduction of prepaid cash cards and the promotion of check cards by deposit banks. Next, we'll identify the SWOT analysis of Capital One Financial. First, Capital One's strengths is a strong market position in the credit card, succeeding with loans and strong returns. Some of the credit cards include Spark, Venture, Platinum, and Journey. Also, the innovation of products and services help promote a strong brand name such as Debt Solutions, Merchant Services, International Banking, and much more. Finally, Capital One has an adequate liquidity position. They have strong deposit base and well-managed liquidity. Next, with the weakness of Capital One, there is limited international presence enlarging the business risk. Capital One is only present in 10 countries with 17 offices. Another weakness is the increased provision for loan losses. This occurred mainly due to the non-interest income and expenses affecting the net interest revenue. Opportunities of Capital One include the acquisition of Chevy Chase Bank, participation in the U.S. Treasury, and commercial banking. The acquisition of Chevy Chase Bank will increase market share. Also, it will help add customer satisfaction with personalized customer service. It will broaden the national scale of the company but still remain customer-focused with its local banks. With the participation in the U.S. Treasury Department Capital Purchase Program, exchanging U.S. currency for foreign currency will be quicker and easier. Finally, commercial banking will have much more positive outlook. In the U.S., Capital One supports companies' revenues with over $10 million. Lastly, major threats include identity theft and economic downturn. With the identity theft affecting 9 million people each year, this could affect the profitability of Capital One, increasing losses. The economic slowdown in the U.S. may affect profitability. If the credit card companies are not funded, then in return they are unable to give credit and loans to people. This includes the internal and external analysis of Capital One Financial.